Well, hello again. This is Jeff Green, and welcome to another edition of the market timing summary for the week ending January 14th, 2011. On my post, I wrote a little bit about market predictions and how the media outlets are proclaiming a great correction coming, and that may be true. But what I want to talk about in this post is the fact that the market fundamentals and the foundations are just getting stronger here. There's two indicators that are potentially a little bit more worrisome, but what I want to do in this post, this video, is just go through the foundation a little bit and talk about how strong this market is. What I have up here as a first chart is the advanced decline line of the New York Stock Exchange, and you can see that both moving averages are moving up nicely. The shorter one is the shorter ones are certainly moving up faster than the longer ones, and if you look at the advanced decline, you can see we put on 461 positive issues just in Friday alone. And if you read my blog post, I believe the number was 2,162 advancing issues over declining issues. That's a sign of a healthy market. That's a sign that you want to get involved in these stocks that are moving up and make some good money here while it lasts. Let's move down to the next chart, which is a chart of the stocks above their 50-day moving average. Like I've spoken about a number of times, the 50-day moving average and the 200-day moving average are sort of the demarcation line for professionals that help them determine whether a stock is bullish or bearish. And you can see from the number of stocks above the 50-day, we're pretty flat from last week. We're a little bit under 80%. That's okay. Anytime you've got the majority of the stocks in a bullish position, you've got a pretty good foundation to build on. Actually, the number of stocks above the 200-day moving average, which is this chart, moved up. Last week we were a little bit below 80%. This week we've moved up by about 3% thereabouts. And we're sitting at over 80% above their 200-day moving average. That's a pretty good number to be bullish, a pretty good number of stocks to be bullish, so there's some good foundations here. On the new highs versus new lows 5-day total, we seem to be building a symmetrical triangle here. I've outlined this for you on the chart. In technical analysis, a symmetrical triangle like this usually ends in a breakout one way or the other. So until we get to the end, we really don't know what's going to happen. Typically you would expect the breakout to occur about 2/3 before you get to the apex of the triangle, and that's sort of a little bit of a concern. But typically what happens if it breaks out through the end here, you'll find it meandering one way or the other instead of breaking out sharply to one side or the other. But this is indicating sort of an indecisive mood on this indicator at least. Let's move on down to the Volatility Index, which we've talked about a number of times. You can see this on the daily chart. It created another low that's equivalent to the low set in December of last year, which sort of coincides with this low that was set in April. And the VIX itself is not an indicator that you should use to tell you which way the market is going. What we want to do is keep an eye on this, and if it starts moving solidly in one direction, in this case it will probably move up, it could be a very strong indicator that any other indications that the market is going to move down should be heeded. So we'll keep our eye on the VIX, but right now it looks like it's supporting our market as it moves up. On the weekly market timing chart, you can see what a great bullish week we had this week. It tried to go down a little bit in the week, but left here with a bottoming tail. And since we broke through the support, we've had 6 solid weeks of gains, including the week prior to that. There's 7 solid weeks of gains here. On my my verbiage post, we talked a little bit about ADX. ADX is strengthening, which shows that this weekly trend is getting stronger, not weaker. The problem is that most people don't look at the ADX and they look at the MACD and stochastics. If you just look at those, it tells you the market's a little bit oversold, and that's probably an accurate assessment. What I'm still expecting here is that sometime we're going to get a pullback, and it's likely to bottom out right here at the prior resistance, which is now acting as support. So we'll keep an eye out for that, but you should use a trading strategy that, quite frankly, would expect a pullback. But we don't know when it's going to happen. Right now the market's looking pretty healthy. On the daily market timing chart, you can see again we had a good Friday. Friday's volume increased. Monday's volume was a little bit higher on what shows on the chart as a down day. But if you look at the chart, you'll see that both last Friday and this Monday created a bottoming tail, which is actually quite bullish for the market. So you have to look at the volume and the type of candlestick that it created. Then we had pretty much update for the balance of the week, and then on Friday we had expanding volume on a day that it moved up. So once again, looking at the ADX, it's showing a strengthening trend to the upside. So I think we're good to go on new long positions. Just make sure you keep stops tight. Don't let profitable positions turn into a loss. And we'll touch base with you next week. Thanks for joining me. Again, this is Jeff from stock-trading-picks.com. Just visit this website for more information and stock market picks for the next upcoming trading week. Thanks again. We'll see you next week.